Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario where we are looking for a wave 3 or C to the upside after the low of wave 2 or B is in. But that is also the problem with this scenario, this being the low over here, because if we follow the Elliott Wave rules and we count the corrective structure to the downside, it doesn't really make sense to have this as the low, and therefore the probabilities are lower that the low is already in, and therefore the probabilities for the medium time frame bearish scenario are at the moment higher. However, in this bullish scenario, we are then looking for a wave 1, wave 2 continuation to the upside in a wave 3. And if we then zoom into this structure over here and we move ourselves towards the 30-minute time frame, we are looking at a 1-2, 1-2 and then continuation to the upside in a wave 3, where this second wave 1 is then a diagonal structure. So over here we are then looking for a 3-wave structure in a wave 1, a zigzag, looking for another zigzag in a wave 2, and then you want to see zigzag in 3, zigzag in 4 and a zigzag in a wave 5 that then finishes a second wave 1 for then a 2 continuation to the upside in a wave 3. Now most commonly a contracting diagonal wave 2 is retracing to the golden pocket to the 786 area, but the 0.5 is a less common target but a target nonetheless, which has been hit as you can see. The main issue in the bullish scenario here on the micro is the double 1-2, because if you're thinking about a 1-2, 1-2 for then continuation, most commonly the second wave 1 is shorter in price and shorter in time than the first wave 1. But you can see that if this is the first wave 1 and this is the second wave 1, the second wave 1 is going to be much longer in time and also bigger in price, which is not what you want to see, lowering the probabilities of the micro bullish scenario. And this bullish scenario has already been invalidated as this wave 4 retraced too deeply, as we were potentially looking for 1, 2, 3, 4, 5, looking for another 5 to the upside, but we never really got that last little kick towards the upside to finish an impulsive structure. Now if we go to the medium time frame bearish scenario, we are still expecting a move to the downside. So over here we're looking at a zigzag, an ABC to the downside, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the current high that we have over here for B, sitting between 27.2k and 26.5k, which is in nice confluence with the support boxes that I have over here as well, with the upper blue support box sitting between 26.8k and 27.4k, and the one that's in confluence with the 1.236 just below between 26.2k and 26.5k. Now for a wave B, the 382 is a minimum target from a Fibonacci standpoint, taken from the high to the low of A, but if price goes towards the upside, it is still very valid for a wave B, where we also have that triple top at 30.4k for then maybe a liquidity grab and a move towards the downside. However, will we reach that high? Well, let's zoom in to the low time frame, right? Because there's two scenarios here, either a WXY or we're looking for an ABC. Now an ABC is a 3, 3, and then you want to see a 5-wave structure to the upside. However, as just mentioned on the micro bullish invalidated scenario, this being a 5-wave move to the upside is kind of invalidated. So in this wave C, you then also have to think about an ending diagonal, where this is then a wave 1, 2, 3, 4, 5, to reach this wave C target area between the two 1.618s, which is between 30.5k and 30.9k, just above that triple top over here. But we currently reject inside the wave Y, most common target area, where we are looking for a 3, 3, and then another 3-wave structure to the upside. And because in wave W we've been looking for an expanding flat, wave Y cannot be a flat and is most commonly a zigzag or a triangle. Well, obviously a triangle is going to be a little bit difficult at the moment. We're then looking at this to be a zigzag to the upside in a wave Y, and then a 5, 3, 5-wave move, where the most common target for wave Y has been nicely respected. We also had a target box over here, and at the highs we also created bearish CVD divergences over here for then this push towards the downside. Now, is this then the high over here of this wave B on the medium time frame, right, for wave B, and are we now going to move towards the downside to lower prices? That is possible. However, I do like to at least talk about what's happening on the micro to gauge the probabilities of that happening. So if we go to the 15 minute, and we zoom in, then over here we are looking at this zigzag structure in a wave Y, right? And it is quite short. It's a short structure as well in time compared to wave W and wave X, because the vertical lines over here are fib times comparing wave W with wave Y as well as wave X with wave Y. And you can see that this wave Y ended before the 0.382, which is not very common, as usually corrective structures are in relationship with one another past the 0.382, like usually the corrective structures end after the 0.382, comparing the waves with one another. So this is a very short wave to the upside, and that's also the reason why I still have that wave C target area on my chart. So if you look right at the micro, we're looking at this to then be a finish structure in an ABC ending wave Y, looking for an impulse to the downside, because on the medium time frame we're looking for a wave C to the downside, meaning we want to see impulsive structures to the downside. So in this scenario, this move down here is then counted as a wave 1, followed by a wave 2, where the 786 is a good target for a wave 2, and then you're looking for a wave 3 to the downside. And this is a little bit of an issue here, because if we zoom in to this wave 3 to the downside, then of course we saw volume increasing. That is very nice. But if we look at how this wave 3 has been forming throughout the move to the downside, then we can count a 1, 2 over here. You cannot count this a 1, 2, 3, 4, 5, because this wave 3 is then the shortest wave in a 1, 2, 3, 4, 5 wave move, which is not allowed following Elliott Wave rules. So then you have to think, okay, 1, 2, 1, 2, 3, 4, 5, ending the wide wave 3. And then you want to see a wide 4 and a wide 5. But we never got that wide 4. We never got that wide 5. And if this is the high of this wide 4 over here, looking for now a wide 5 to the downside, then this structure, look how long this structure is in time compared to a much shorter wave 2. It doesn't look good and lowers the probabilities that this is a wave 4 that is in the same count, like the same degree count as this 1, 2 over here. However, you can't really count any of these structures over here as the low of the wide 3 and the low of the wide 4. So preferably what I wanted to see is a 1, 2, then a 1, 2, 3, 4, 5 inside 3, then a 4, and then a 5 to finish blue 3, hitting the 1.618, which is in blue, as that is then the minimum target usually for a wave 3 in an impulsive structure to the downside, then a blue 4 and a blue 5. But we never got this structure over here, which is for me increasing the probabilities that price might at least reverse to the upside to hit the target box that we have above price over here, which is sitting between 29.7k and 29.8k. If we go to the second micro bearish scenario, we could be looking for a diagonal to the upside as well, as mentioned in potentially that wave C going towards the higher targets, where this is then a wave 1, wave 2, looking for 3, 4, and eventually wave 5, where then the target area around the triple top is definitely going to be an area of interest, where also we have a resistance area sitting between 30.4k and 30.6k. Now if we look at the CVD divergences, we do have over here some bearish CVD divergences with this high, lower high on price, higher high on the CVD. However, preferably I like to look at CVD divergences after a new high or low has been made. So preferably I like to look at CVD divergences after this low over here, which then means I can't really include this. Still, I like to show it because it is something to be aware of. And if we look at the CVD chart over here, then we don't, we do have the bullish, do we have bullish CVD divergences? Let me check over here. Yes, we do have a bullish CVD divergences, higher low on price, lower low on the blue line, which is a bullish CVD divergence, where then the target is going to be this high over here. So then higher low on price, lower low on the CVD, the target is then going to be this high, where just above we also have the resistance box. Now we do have news today, so make sure you trade safe at 2:30 p.m. Central East European time. High impact news can kick in some volatility, so make sure you have a good plan and strategy. Then also it is the last day for this special campaign for the Koenz trading community. Link in the pinned comment and the description if you want to check it. It's an amazing campaign that they made for our community, so make sure to check that one out. out. And then finally, if we look at the probabilities, then on the medium time frame, the probabilities are higher for still a move to the downside, going towards that 27k area, and see how price reacts over there. On the low time frame, I am neutral between the scenario where wave Y is either already in or wave C is still coming, because it mainly depends for me on the lower time frame, or at least I should say the micro scenario, and what's happening over here. And if we count that impulsive structure to the downside, then micro over here I wrote target box question mark, because it doesn't look like a very nice impulsive structure to the downside, as I've explained. So I'd be looking for this target box, and if price can make it to the target box, I'm curious to see how price is going to react over here, and then we take it from there. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.